GST special all week only on Bloomberg Quint.
Hello and welcome. This is All You Need to Know. I am Agam Bakir. Let's start off with the SGX Nifty, which is trending marginally in the red for now at around 10,764 and has recovered from day's lows. But let's take a look at how our markets panned out. In yesterday's day of trade, we did see strength come through for the Nifty 50, up by 0.6%. And, well, trailing were the mid-cap and the small-cap indices marginally in the green. And we did see some strength come through in several other sectoral indices as well, such as Nifty Metal, Realty and Auto indices. The Auto Index specifically up and about on account of some more quarterly, more volumes that we saw for the month of June gone by. Now, the Nifty Pharma Index on a month-to-date basis has advanced by as much as 2.5%, followed by the Nifty Auto Index. A large part of these gains came through yesterday, and infra, metal and realty indices continue to bear down on the broader markets. But when it comes to some of the other factors, such as the foreign institutional flows, well, they remain tepid. In fact, an outgo of just around 285 crores, or DIs on the other hand, bought 611 crores worth of equity in Indian markets on a net basis. That means that we really haven't seen too much change on a year-to-date numbers, as you can see here, for FIs or DIs. But moving in terms of the contributors, we have seen a lot of strength from HDFC Bank and Reliance Industries, gaining and also lending strength to the indices. But on the other hand, we do have some weakness on Infosys and TCS from the IT pack, and ITC also bearing down on the indices. And with that, let's also take a look at the futures and options space. We do have fresh longs building in even as the Nifty advanced, and it's the same for the Nifty Bank futures as well. Another 5% added in open interest even as the index moves up by nearly 1%. Now, when it comes to open interest distribution, that remains within the range of 10,600 and 11,000, denoted by the 10,600 put, which has max OI, and max OI in the 11,000 call as well. And what does it mean when it comes to changes in open interest? As one might expect, more and more writing coming through in the 10,700 put and the 10,800 put, and this also indicates some resistance coming through, some writing seen around the 11,300 call mark. But when it comes to the Nifty put call ratio, that has edged up higher at around 1.53, and it is the same when it comes to the Nifty Bank put call ratio at around 1.18 now against 0.78. Now, in terms of stocks, I'm watching out for Apollo Hospitals that's seen fresh longs come through, and we have also seen fresh longs in something like a Repco Home Finance. On the other hand, sticking with the NBFC space, well, Shriram Transport Finance was perhaps a stock to watch yesterday, considering the the substantial decline that we saw in the stock, down by as much as 12% and 56% added in open interest, and perhaps some weakness in store in today's day of trade given the kind of selling we saw in Shriram Transport Finance yesterday. But these are just some of the stocks that we're watching out for. But now let's go across to Bloomberg's Paul Allen for the top international headlines.
The chief UK Brexit negotiator has heaped new pressure on Prime Minister Theresa May by rejecting her latest customs proposal. Just a day before the cabinet meets to force agreement on Britain's trading relationship with the EU, sources say David Davis has told her that the compromise plan is unworkable. May has briefed ministers on some of her plan, but has kept the full document from them. UK police say 2 more people have been poisoned in southern England with the nerve agent Novichok. It's the same substance British authorities say was used in March to attack former Russian spy Sergei Skripal and his daughter. The latest victims fell unconscious on Saturday, about 13 kilometres from where the Skripals were poisoned. They remain critically ill in the hospital. MSCI says Xiaomi will not be eligible for inclusion in benchmark gauges because of its controversial dual-class structure. The index provider says Xiaomi's Class A stock offers 10 votes per share, while Class B only gives 1 vote. Companies with different voting rights are temporarily blocked from the MSCI indexes. Xiaomi is expected to start trading in Hong Kong on Monday. policy tightening wave may soon wash up in Bangkok. Minutes from the last month's Bank of Thailand meeting show officials discussed the appropriate timing for a rate hike. They left rates at 1.5%, but said that if inflation moves within the 1 to 4% target range, the case for a rise could be made. The baht weakened more than 5% against the dollar in the second quarter. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Back to local equity markets. Talk of the day is Future Lifestyle Fashions today on account of the company plans to acquire 29.9% stake in Cooves for a sum of around 140 odd crore, which is an online strategy to enable the reach to more customers for the company. If you look at the consolidated picture of the overall group, the group owns over 60 brands and over 2,000 retail stores. These stores have been spread across over an average area of around 22 million square feet. And talking about the volumes, it sells 300 million garments in over a day now. And if you just individually talk about Future Lifestyle Fashions, it owns markets about 30 fashion brands, operates over 400 stores, which is spread across 6 million square feet space. And it has also invested in brands like Biba and just talking a little bit about what Cooves is in that case. Well, Cooves is a leading e-commerce fashion business, and this transaction is expected to mark the giant step into the e-fashion market in India. How this transaction overall will work? Well, Cooves will first issue 57.8 million shares at a price of 10 pence per share, and then you have 5.78, which represent 24.8% share capital of the company, from which the company Cooves will raise around 57.87 million in euros in cash. Also, if you look at additionally Cooves will raise around 10 million euros at 15 pence per share via book building method, out of which chairman has committed to buy in 1.5 million euros. Separately, you will also have Future Lifestyle then over and above this transaction, which will further buy into equity in order to make its share capital or acquire share capital worth around 29.9%.
Let's get your check on the commodities and currency space. Starting off with commodities and oil prices in particular. If you look at the Asian hours, WTI is trading about 0.5% lower after being shut on account of US holiday overnight. But that holiday didn't stop Donald Trump from angrily tweeting against OPEC, saying that OPEC is doing little help to reduce the gasoline costs. And as far as the US inventory data is concerned, the US inventory is said to have fallen as much as 4.5 million barrels for last week. So that's as far as the oil markets are concerned. But shifting focus to the base metal space, the index itself on London Metal Exchange declined for a 5th straight day. All the base metals except for aluminium ended lower. So aluminium snapped its 4-day losing streak, while we had copper, which ended lower for the 3rd straight day. Zinc, in fact, was the top loser in trade. That saw a cut of about 3.5%, and it ended at a 52-week low. Nickel also ended lower, and it is that all days of this week it has in fact lost ground. Now, if you look at the Shanghai Futures Exchange, we are seeing some sharp cuts come about for copper and zinc prices. Copper, in fact, trades lower for the 5th straight day, and Shanghai zinc is down nearly 5% for the week itself. Lastly, we have gold prices, which have seen some bit of uptick come about, now inching towards the 1260 mark on account of the dollar index, which has seen a decline for the 2 consecutive sessions. That said, Saloni Dhanuka is here. Good morning, Saloni. What cues are you picking up from the currency market space?
Good morning, Jayesh. So speaking about Indian rupee, after seeing a strong recovery in the Indian currency on Tuesday, the rupee yesterday reversed most of its gains and ended 17 paise lower at 68.74 levels against the dollar. Now, rising crude oil prices and inflationary pressures after MSP hike for Kharif crops by the government largely weighed on the rupee yesterday. Well, speaking of the bond market, sovereign bonds gained in trade yesterday for the second consecutive consecutive session as yield on the 10-year benchmark security dropped nearly 3 basis points to end at 7.85%. Now, in terms of flows into debt market, global funds increased their rupee debt holdings for the 7th consecutive session yesterday. That's according to NSDL data. Well, on the global front, with US markets shut, investors are turning their attention to US Federal meeting minutes, which is scheduled to release today. Traders are factoring in 2 more rate hikes by the Fed in this calendar year. Well, that apart, Euro climbed on speculation that European Central Bank may not wait until late 2019 to raise interest rates, and also British pound gained in trade yesterday against the dollar after the data released that services PMI data was better than expected. And lastly, speaking of dollar rupee now, it is trading almost flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade.
Well, amongst the stocks that you must track and trade today is GM Breweries, which will kick off the earnings season. It will report its first quarter numbers today, so that's a stock to watch out for. We also have Titan, which has shared its quarterly update. Negative reaction possible there because the company has said that the jewelry business is likely to post a muted growth for the April to June quarter. CLSA has said that such negative commentary has come from the management after several quarters, so some negative reaction likely. Biocon has the sterile drug production facility has received a EU GMP certification. The US FDA approval had already come in. This is the EU also giving its approval. So some positive reaction probably possible there. Force Motors has reported its June auto sales numbers. The total sales were up 8.2%. You also have Intellect Design Arena. Now the company has signed a pact with Banco Santander to implement the digital transaction banking platform. So it's already an existing customer for the company. You also have FIAM Industries. Now they have signed an agreement with 2 Japanese companies, Denso and Toyota Shushu Corporation. This will be to manufacture bank angle sensors. This is specifically for motorcycles in the Indian markets, but you could see a positive reaction on this counter as well. Som Distilleries has acquired a brewery based in Odisha for 46 crores. That's another stock to watch out for. You also have Bharat Road Network, which will be in focus, and this is as Religare has filed a plea under IBC against the company and has claimed a default of 51 crores. So Bharat Road Network in focus. CMAC is yet another one. They have signed or in consortium with the company entered into a contract with ONGC. This is for charter hire of a vessel, and the deal has been valued at $22 million. Nath Biogenes India is another company, small company, but here the promoters have said that their pledged shares have been released by Asset Reconstruction Company of India. That's after they cleared all the outstanding loans. And finally, yesterday in a bulk deal, we did see equity change hands in Indiabulls Ventures. So Cinnamon Capital sold 2.7% stake. That's a stake worth 650 crores. The buyer in this transaction was Jasmine Capital Investment. So those are some of the names that you need to watch in trade today.
The MSPs for the Kharif season were eagerly awaited. A bunch of reasons for that. One, there's all this talk about agrarian distress, so these MSPs were coming against that backdrop. 2, everyone is trying to gauge whether the government is turning a little bit more populist going into an election year. And 3, we're also at the turn of an inflation cycle. For all of those reasons, the MSPs are important. What did you get? Well, you got a much higher than expected hike that you have seen in the last 3 years. So some of the key crops, paddy, about a 13% increase, jawar, bajra, cotton, all very sharp increases. If you look at some of the pulses, the trend was slightly different. Pulses where there's been a bit of a glut of supply in some cases. The increases were lower. Tur at about 4.3% year-on-year increase. Urad 3.7%, but Moong quite a steep increase of about 25%. On a weighted average basis, according to CRISIL, the increase in MSPs in the Kharif season is 13%, and that increase is steeper than what you have seen over the last 3 years for sure. In terms of how these MSPs have been computed, there was a lot of debate after the budget said that they would insist or ensure that 50% over and above cost is given to farmers. Well, that cost is being computed based on the A2 plus FL cost formula, and that includes the actual cost and the cost of family labor. So that is the cost, and over and above that, they're ensuring at least 50%. In some cases, actually, it's as high as 90% over and above that A2 plus FL cost. But the other sort of concern was that perhaps you could move to C2 cost, which is an even higher estimate of cost than A2 plus FL. That includes land cost, capital costs, etc. There was some concern that you may move to that particular formula, but that the government has decided to stay away from, and perhaps rightly so, because that would have been too sharp of a jump coming in. What is the impact of these MSP hikes? Well, economists differ on the inflation impact. 35 basis points on the low end, some saying as high as 70 basis points, but it's difficult to actually compute the inflation impact very accurately because it also depends on the amount of procurement that gets done. But no doubt that there will be an upside impact from this on the inflation print. It is more positive for rural, rural economy, for the farm sector. Some of that was already being seen in green shoots in the rural economy. So this will perhaps only add to that, and perhaps it can help balance out the concerns that had emerged on the agrarian distress front, while of course exacerbating some of the inflation pressures which have already started to pick up. But maybe that balancing act had to be done because you couldn't be in an economy where one segment, an important segment of the economy, which is the agricultural sector, saw a fair amount of distress based on everything we've been hearing.
I think as we saw in the press release of the government, the MSPs have been increased by something like up to 97%, 50 to 97% is the increase over the A2FL. And now I think if you compare it with the MSP of last Kharif, then it works out to be 4 to 52%. And 52% I think is in Ragi, and in some of the pulses, I think it's at the lower end of around 4%. So I think it varies across crops. Now, I think the critical issue is what is it going to cost the government, number one, which is a little difficult to work out at this juncture because it will depend on how much government procures. But we did a simple calculation as to if government were to procure the same amount as last year, just the increase in prices, in minimum support prices, would lead to an additional expenditure of about 11,500 crores. And the actual cost is going to be upwards of that because government is definitely going to procure more than it did last year using a combination of methods. So clearly, I think that's on the fiscal side. And on the inflation side, I think our assessment currently is that it is going to have a mild inflationary impact. Actually, it depends on how effective the procurement is. The more the government is able to procure and keep the prices up, the more its impact on inflation is going to be. And if indeed, I think the output gap is closing, as RBI pointed out, then I think then this step can be mildly inflationary for overall generalized inflation, from overall generalized inflation perspective as well.
Mr. Siraj Hussain, there will be a tendency to say that this is inflationary, and yes, of course, it will be inflationary. But I think at this juncture, when we've had 12, 18 months of, instances of farm distress emerging from various parts of the country, perhaps there is some justification to the government reversing its last 3 years policy of very moderate MSP increases, sir.
Yes, I think it is a good decision of the government, and we cannot fault the government now on the ground that it will cause inflation, because it was known that over a period of time there may be some impact on inflation. However, I would like to clarify that it is not necessary and it is not automatic that increase in MSP passes to the increase in market prices. We have seen in the last 2 years especially that the MSPs of pulses were raised very substantially, and yet the market prices remained much lower than the MSP. In case of groundnut also, we have seen even in Gujarat itself that the market price is about 1,000 rupees lower than the MSP of groundnut. So this passing on of higher MSP to the market rates is not automatic, and we do not know how much time it will take for the market to rise in sympathy with the MSP. However, in the longer run, there may be, of course, inflationary impact. However, for the time being, we can say that the farmers of those states where the procurement machinery is robust, and of those commodities where procurement is actually undertaken, rice and paddy and cotton, for example, these farmers will benefit. So we can say that the farmers of Punjab, Haryana, Andhra Pradesh, Chhattisgarh, Western UP, Odisha will benefit, the paddy farmers, and the cotton farmers of Maharashtra, the cotton farmers of Gujarat may benefit if the Cotton Corporation of India undertakes the procurement of cotton. So for the time being, I think it is a good decision, provided, and that is yet to be seen, how the government actually helps the farmers of those crops which are not procured by the government. So for example, the farmers of maize in Bihar, we have seen that even last year, the farmers in Bihar were sold their maize at about 200 to 300 rupees less than MSP. How are they going to benefit from this? Or the paddy farmers of Northeast. There is no procurement of paddy in Northeast, entire Northeast. So how are they going to benefit? These are the details which are yet to be seen, yet to be released by the government.
Well, moving on to some more stocks to watch based on the delivery buying and selling as of yesterday. The first stock on the list, that was Shriram Transport Finance, arguably the stock of the day yesterday, and that saw a cut of about 12% yesterday. It saw a delivery selling of nearly 450 crores, while the delivery volume surged 3 times as compared to its 5-day average, and the total volume surged nearly 4 times as compared to its 5-day average. Second stock to watch out for, Grasim. Now that was also down about 2% in trade and saw delivery selling of nearly 86 crores. The delivery volume more than doubled for itself as compared to its 5-day average, and the total volume surged just about 47% as compared to its 5-day average. Last and final stock to watch out for, Maruti. Now, after a long time, this actually saw a gain of about 2.7% and saw delivery buying of more than 300 crores. The delivery volume surged 62% as compared to its 5-day average, and the total volume managed to surge about 50% as compared to its 5-day average.
Also, the day first we have is Macquarie on United Spirits. Now, the brokerage has maintained its underperform rating on the stock with a target price of 443. Now, according to the brokerage, the route to market changes in the Uttar Pradesh led to strong pickup in volumes in the last 3 months. However, going forward, these volumes will normalize as market share gains will be gradual, according to the brokerage. Now, the brokerage has an underperform rating on United Spirits because they are expecting the company's EBITDA to grow at a CAGR of around 18% over FY18 to FY20, as against the street expectations of a 40% growth rate. Now, this will happen because Macquarie is expecting the company's advertising expenditure to remain high going forward, but the price hikes will not be as high as the advertisement expenditures of the company going forward. And on the back of this, they're expecting a slower growth rate for the EBITDA going forward. Last, it also says that the United Spirits trades at a significant premium to its peers, and that's the reason they have an underperform rating on the stock. Second we have is Deutsche Bank on Shriram Transport Finance. So the brokerage has maintained its buy rating on the stock with a target price of 1700 rupees. Now, the company disclosed a non-funded exposure of close to 900 crore to other group entity in its latest FY18 annual report. Now, the brokerage say that these off-balance sheet exposure would have a limited impact on the book value of the company. In the worst case scenario, the brokerage is expecting a 20% impact on the EPS and a 4% impact on the book value of Shriram Transport Finance because of this off-balance sheet exposures. However, the brokerage says that the proper management communication is now critical to lower the concerns over the corporate governance issue. Lastly, it is expecting core operations of the NBFC to remain robust and strong growth momentum to continue going forward.
Well, there's lots to talk about over the course of the day, and not least of which, of course, is going to be the AGM of Reliance Industries. Do stay tuned over the course of the day to all of that on Bloomberg Quint. There's several stories that are currently on the website that you can read. However, here are just a couple of them. PTI has reported, quoting sources, that the RBI has issued a license to the Bank of China to launch operations in India. And a round of succession planning is imminent at Housing Development Finance Corporation and its group companies. And that's according to non-executive chairman Deepak Parekh, who said this in a letter addressing the shareholders. Well, that's all you need to know going into trade today. Up next is Indian Open, and that promises to be a very exciting Indian Open. Do stay tuned to Bloomberg Quint to find out everything that is to be discussed. Thanks for watching.